Okay. And with the ASX, I mean, the ASX got hammered yesterday. Why were investors overheating their sell buttons, do you think? And here we got a chart of that, but it was a pretty bad day yesterday on the ASX.
Oh, look, I think, the big catalyst yesterday was obviously the GDP. Australia's sort of going through tough times at the moment, arguably the worst retail spending recession we've seen since the early 90s. The RBA doing their best to get the inflation rate down, but it's hard when you've got fiscal spending from the government on the other side and hiring in the government sector, and then high rates of immigration. So it's a balancing act. Look, there's nothing to worry about in terms of the technical setup for the ASX 200. I think if we do get some volatility over the next 4 to 8 weeks, 7,600 will prove to be a fairly formidable support zone. It took a number of years for the ASX to really climb above that level. So, just as we talked about the pullback in the S&P 500 down to sort of that 5,100 level, possibly being on the cards, I'd look at 7,600 as being a buying opportunity for the ASX. What could get it there? Well, uncertainty around the US election might see a sell-off over there. More importantly, we might get economic numbers coming through that show that the economy in the US is deteriorating faster, or deteriorating at the edges, and the unemployment the labour market's deteriorating faster than anticipated. So a lot's riding on the non-farm payrolls, which comes out tonight. I should say on not tonight. It comes out Friday morning in the US, Friday evening our time, and I think that is going to set the pace for the benchmark indexes, and including us. At the moment, I think it's quite commendable that the ASX 200 has been managing to push up to near record highs, despite the fact that we're nearly in a recession. So that sort of gives you an idea of the underlying strength in this market. We are in a bull market. The stock market is not the economy, and the economy is not the stock market. So, I'm encouraged by all of this, and I think 70,000. If we saw 7,600 on the ASX, it would be time to get in and go back to 100% invested. So that's kind of the playbook, Patrick, for us for the next sort of 4 to 8 weeks.
Okay, and I just wanted to ask you this question. I mean, we saw that early August drop in the market, and then we saw the ASX kind of go through August and kind of pick up a lot of what happened in the beginning of August. Did you see any similarities between what happened at the beginning of August and what we're seeing here in September?
Yes, I mean, normally when you get a jolt like what we saw in August, and a big rebound, but a rebound which fails to take out the previous highs, and we're seeing that heavy resistance. We talked about 5,600 on the S&P 500. It's 8,100 for the ASX. Normally, there's always a second leg to the correction. It's a sign of what could come. Personally, I think it's going to be growth scares, concerns around the soft landing in the US, concerns around China slowing down, and we're going to talk more about China later on. And obviously, we've seen the commodity prices get knocked around a bit in the last couple of weeks, which is translated to weakness for the resources sector. So I think there's a number of factors out there that could be the trigger point for another leg down in this correction. I think we saw the opening shot on Monday, and I think there's probably further to go. So we should just be braced for a bit more volatility. I don't think it's going to be anything worse than much more than a 10% sell-off. And I'm looking to October to redeploy cash.